In a historic moment for India, the World Bank has reaffirmed its strong confidence in India's economic growth trajectory, even labeling India the shining light in the world and a prime destination for investment. While speaking at the Advantage Assam 2.0 Business Summit, World Bank Country Director Auguste Tano Kouame rejected any worries over short-term fluctuations, urging global investors to capitalize on India's long-term growth. He stated, quote, "We are not worried about India's current growth. We are very bullish about India and will remain bullish," unquote. Kouame emphasized that fluctuations of 1% point in economic growth do not alter the World Bank's positive outlook. Remember, for the current fiscal, the Reserve Bank of India predicted a 7.2% economic growth in December 2024 compared to 8.2% in 2023-24. The World Bank's remarks come at a time when Sensex and Nifty have been witnessing a downturn triggered by the exit of FIIs from the Indian market, leading to over 10% decline in the Sensex. Global investors have pulled out nearly 2 lakh crore rupees worth of shares since October 2024. Mid-cap and small-cap stocks have been hit even harder, with the BSE Mid-Cap Index falling 19% and the BSE Small-Cap Index dropping 21% during the same period. But the World Bank claims minor variations in economic growth rates do not impact the bigger picture of India's growth. The World Bank Indian chief explained, quote, "If somebody is worried about recent data, we would like to say that don't worry. India is the shining light in the world. If you are looking to invest, then come and invest here. The Indian growth makes it the place to invest," unquote. The slowdown in corporate sales growth has made investors seem cautious, as seen in the December 2024 quarter, when the combined gross sales of Nifty 50 companies grew by 6.6% year-on-year, down from 9.2% in the same quarter of the previous year. The World Bank highlighted that the dampening of the market investment caused by FIIs selling stocks and pulling out money from the stock market may not be the right move, as India continues to remain the best place to invest in a highly volatile world. India's gross domestic product or GDP growth is officially estimated to be at 6.5% during FY25 against the 8.2% in FY24. According to a report released by CRISIL Intelligence, GDP growth is projected to remain steady at 6.5% despite ongoing global uncertainties due to geopolitical shifts and the trade-related tensions stemming from US tariff threats. CRISIL's Managing Director and CEO Amish Mehta, speaking about India's resilience, said, quote, "India's resilience is being tested again. Over the past few years, we have built a few safe harbors against exogenous shocks, healthy economic growth, low current account deficit, and external public debt, and adequate forex reserves, which prove ample policy latitude. So while the waters can turn choppy, consumption-led rural and urban demand will be crucial to short-term growth," unquote. The numbers indicate that the Indian economy has closed the gap to Japan even further, as the latter stood at a $4 trillion economy mark by 2024. India's economy may overtake Japan's by next financial year as India continues its steady growth while Japan's economy is stagnating with a 0.7% growth rate in FY24. India is now poised to become the 4th biggest global economy and the 2nd largest Asian economy by 2026. India continues to show resilience in certain pockets, be it consumption trends, services growth, the rising share of high-value manufacturing in exports, or capital market. The manufacturing sector is the main growth engine, expected to average 9% annual growth from fiscal 2025 to fiscal 2031. The share of manufacturing in India's GDP is forecast to rise to around 20% by fiscal 2025, up from approximately 17% in fiscal 2024. Manufacturing exports in high-value segments like electronics and semiconductors and chemicals reflect India's strengthening position in the global value chains. In FY 2023-24, India's exports of goods and services stood at $778 billion, but it is projected to reach $2 trillion by 2030. Unlike the aging populations of the United States and China, India's dynamic and youthful population is a huge driving force behind its economic certainty. India's labor force expansion over the coming decades reflects India's future resources score, which has increased by 8.2 points. Programs such as Make in India and the push towards Atmanirbhar Bharat have enhanced India's industrial and economic base. Incremental improvements in defense sales and exports have also enhanced India's global reach, with the likes of BrahMos missile sales to the Philippines, with other ASEAN nations to follow, which are all currently locked in a maritime dispute with China over the imaginary 9-dash line. Latest trends only indicate that India will maintain a high growth trajectory, as evident before the slowdown triggered by the global pandemic which emerged from Wuhan in China. So while the world struggles to overcome the long-term impact of the Wuhan pandemic, India's growth story seems to be back on track. Have your say. Can India become a top 3 global economy before 2030? Leave a comment with your opinion, hit the like button and subscribe to Inconnect News.